The following segment were paid for by Emprise Bank.
When it comes to mortgages, many people think they have to wait until they've saved 20% for a down payment or have a perfect credit score. Those two myths keep would-be homebuyers on the sidelines. Today, Emily Reisig with Emprise Bank is here to separate fact from fiction and share some practical tips. Emily, a lot of people delay buying because they've heard you need to put 20% down. Is that true?
No, this is actually a myth when we think about home buying. In reality, most home buyers put somewhere between 6 to 9% down on most purchases, according to the National Association of Realtors. And in some loan situations, buyers can put down as little as 3%.
What do you think causes the confusion?
Yeah, I think part of the confusion is around private mortgage insurance called PMI. PMI is usually required when your down payment is under 20%. The good news, once you build enough equity, you may be able to request that PMI be removed, or depending on your mortgage, it might automatically end when you reach a certain threshold. I do want to mention one quick trade-off. A smaller down payment usually means a larger loan and a higher monthly payment. The goal is to choose an amount that fits your budget without draining the savings you need for closing costs or emergencies.
And myth number 2 is you need a perfect credit score to get approved. What do lenders really look at?
You don't actually need a perfect credit score. Lenders look at the whole picture, your income, your debt, your credit score, your monthly savings, and that credit history. You are more than your credit score in this situation, and there is a much greater picture. It's true a high score can help you qualify for better rates, so that certainly comes into the equation. But if you're planning to buy in the next few months or in the near-term future, there are a few things that you might want to do to boost your score that can help now. One of them would be pay every bill on time. Keep your credit card balances low, and then also try not to take on any new debt when you're planning for this big home purchase.
So what's one key takeaway for someone who's interested in buying a home?
Yeah, I think the biggest takeaway is don't disqualify yourself and start talking to a mortgage professional early so you can be building that plan towards this goal. The earlier that you take those steps and you put the preparation in place, the more prepared you are when that home comes across that you're ready to take action on, and you're more prepared for the actual purchase when you get to that scenario.
Right, awesome. All right, thank you so much, Emily, for the helpful tips. We will see you next time to talk about auto loans. A few simple ways to think about financing without stretching your budget too thin.
Still keeping an eye out for